Hi, my name's Philip Cheetham. I'm Head of Listed Investor Relations at Charter Hall Group. I'm here today with Retail CEO Ben Ellis. Ben is the fund manager for Charter Hall Retail REIT, listed on the stock exchange and the ticker code CQR. Ben, what's the strategy of CQR? What should investors know about it?
Thanks, Phil. CQR strategy is quite simple. It's to be the leading owner of convenience retail property. We do this by investing in assets anchored by major leading retailers in Australia. These include 49 shopping centre assets anchored by Coles or Woolworths predominantly, and nearly 600 long WALE convenience retail assets leased to the likes of BP, Ampol and Endeavour Group.
So Ben, tell me more about those long WALE assets. What's a long WALE asset?
Well, long WALE assets are traditionally assets that have 15-year lease term. They're triple net leases, meaning there's no capex, i.e. no drag for investors in respect of earnings, and importantly, their rental increases are indexed annually to inflation, meaning in the current period, we're getting excellent rental growth.
And what are some of the long WALE assets that CQR owns?
Here we've got a great diversified portfolio of service stations leased to BP and Ampol in both Australia and New Zealand. And additionally, we've got some high quality assets leased to the Endeavour Group. They're anchored by the Endeavour Group. A lot of them have Dan Murphy's BWS assets on them, which means that we are tapping into the convenience retail liquor market.
So how big is the CQR portfolio?
CQR portfolio currently sits at $4.3 billion.
So Ben, given your strategy is to partner with leading retailers, you've already mentioned Ampol and Endeavour. Who else are the major tenants of CQR?
Sure, across our diversified portfolio, major tenants include the Woolworths Group, Coles Group, BP and Ampol, we talked about, Wesfarmers, Endeavour Group, Aldi, Gull. They're a fantastic group of convenience retailers.
And how much income do they represent?
Our major tenant customers represent 57% of the REIT's income.
And what's the balance of income in the portfolio come from?
Yeah, the 43% left over is our specialty tenant composition, our shopping centre portfolio. They're non-discretionary tenants like Bakers Delight, Specsavers, very much part of local fabric of every society and non-discretionary in their nature.
And how are those tenants trading in the CQR portfolio?
It's a great question, Phil. We've seen record sales growth in our portfolio this year of 5.9%, which is pleasingly also reflected in our specialty tenants with 9% sales growth. That means our specialty tenant sales are growing at 9% in the last 12 months, meaning our rents are very affordable and rent growth going forward will remain sustainable.
And how did all of that translate into earnings for CQR unit holders?
We've today announced a distribution of 25.8 cents per unit, which is up 5.3% over FY22.
And what should investors expect looking forward?
We provided operating earnings guidance of 27.4 cents. Based on today's share price, that represents a very attractive 7.7% operating yield.
Finally, how do investors invest in CQR?
Talk to your financial advisors. CQR is listed in the Australian Stock Exchange under the ticker code CQR.
Ben, thanks for your time.
Thanks, Phil.